Hey, welcome everybody. If you buy eggs or airplane tickets or anything, you know, inflation is hot and ruined my day. So we need to talk about what's going on with CPI and everything else that's going on in this market. Our good friend Sami Abusad will be joining us later on, hopefully. So Derek and JR, how are you guys doing today?
Excellent.
Doing pretty well, all things considered. I don't know what you're upset about, though, because the market has basically traded its way back to flat at this point. So,
I mean, I think I more want resolution. I want some excitement. This is just, we have this little range, and I'm not a trader, so maybe I have the wrong mentality, but I want some fireworks. Don't
It's
you guys
coming.
want fireworks?
It's coming.
Okay, all right. So that perfect topic to start on. So Derek, so why do you think fireworks are coming?
So, in studying this market right now, unless we're able to break out to new all-time highs relatively soon, which could create a feedback cycle of buying that could come in, I think that we are kind of in a distribution period right now for the market. There is an extremely, extremely strong underlying bid to this market. Every small dip gets bought. DeepSeek gets bought. The Monday after that, the tariff news gets bought. This morning, a hot CPI gets bought. This hot CPI, I mean, Goldman and JP Morgan were both modeling that the S&P would be down at least 1.5% on the CPI number that we got this morning. And I'm looking at this buy being down 0.3% and the Q is just ticking green. There is a super, super strong underlying bid to this market that comes from a variety of factors. We're still in a very strong period seasonally here. It's like a lag of the January effect almost that kind of goes through mid-February. So January is the number one month of the year for buy inflows, and that is like especially true after a really, really strong year like we just had in 2024. And the systematic funds have been buying. Retail has been buying massively. We've been seeing data that retail has been buying more in December 24 and January 25 and February 25 so far than they have, or than they were even during the COVID period, even during the height of the meme bubble in late 2020, early 2021. I mean, traditionally, what is a distribution period in the market? A distribution period in the market is when the smart money, whoever they are, transfers their positions to the dumb money, which always traditionally has been retail. I would actually make an argument that retail has gotten a little bit smarter over the years than it traditionally was. And I probably would also make the argument that like hedge fund money has probably gotten a little bit dumber than it used to be back in the day. But that is traditionally what distribution is. And this is coming right as that strong seasonality flow that has been creating this massive underlying bid to this market that's buying every small dip starts to fade as we get into the back half of February and potentially through March and through April. There's probably going to be a lot of forced selling that comes in as we approach tax season as well, just because last year was such a good year that people are going to have to pay taxes to the government on that, unless, I don't know, Trump decides to get rid of taxes for people, but I don't see that happening that quickly. So I think that we're working towards a period of time here where the fireworks are going to happen, and this insane underlying bid to the market that's been buying every minor dip just isn't going to be there in the same way. And it'll be interesting to see how retail reacts that have been jumping in as massive buyers in every 2% gap down, if a 2% move lower actually turns into a 5 or 7% lower. So I'm waiting for the technicals to confirm it because I don't think that they fully have yet. And the technicals for me are always number one. But from a mentality standpoint, I'm actually becoming more bearish right now than I've been in a long time. But it's about timing. It's always about timing, and it's timing with the market dynamics. And it's not quite yet the time yet. But I think another 1 to 2 weeks, we might be able to start seeing some fireworks come in.
Okay, I think Derek makes a good point, because it does feel like every Monday the world's about to end, and by 2:00 things are cool. So JR, what do you make of this sort of this endless underlying bid? And JR, stop laughing. This is serious business.
I look. This is a day trader's market. I'm having a ball. I completely agree with Derek. It's there's a lot of really crowded longs that are crowded with a very much demographically retail crowd. We're going to see some really violent flash crashes, some forced liquidations. We're going to see at some point, some just gnarly margin calls, either from the crypto side or from the, Palantirs and Nvidias of the world. And that's all natural. The market is, goes through cycles of ebullience and excess, and then, fear. If as far as the market we're in right now, it's like the mean reversion gutter ball of death. Every dip gets bought, every rip gets sold as we get tighter and tighter in this consolidation. This morning I told my traders, guys, I wouldn't be surprised if they just bought this dip. S&P, we got some support at S&P 6012 and 6030, and we rallied all the way to 6067, and then we came back. I said, look for a higher pivot lower on 6040. We got it, and so it's just been a whole lot of mean reversion, a whole lot of buying the dip. And, if you're a day trader and you know how to trade a market like this, you can make a lot of money. There's a lot of opportunities.
Okay, I want to talk about a big trend nobody seems to be highlighting out there, and it's gold. Gold has just been, it's up about 11% this year. It's probably double the S&P's return over the past year. Now, JR, I know you and I had some conversations last year about
if anybody had made a really bullish call on gold 6 months ago.
I'll be honest, I totally forgot about it. And then yesterday I was like, look at gold. I was like, didn't JR tell me he was bullish on gold and silver? Now, I don't know what the gold bugs are saying today, but why is gold going up? And does why even matter?
I don't care. I mean, look, I've sat there and listened to all the different roundtables, the whole currency hedging, inflation hedging, the Trump tariffs, the bond market. I'm sure those are valid arguments. Technically, if you look at spot gold on a weekly chart, I should probably share my chart. How do I share my chart again?
Hit present.
Sorry, I'm a Luddite.
And then share screen.
Yeah, 1 second. It doesn't take a genius to look at a chart like this, right? And a base breakout like this one, and say, okay, we have a massively bullish breakout at right here, 2068, and extrapolate the measured move to 3,000, and that's exactly what we did. And we've been doing for the past 9 months. We've been really bullish on gold, and a lot of amazing trades and the old gold. So,
Okay, Derek, are you a gold conspiracy theorist? Do you have any?
Do you stay late up at night listening to Peter Schiff?
No, I don't.
I don't mean to pick on the gold people, but I feel like if inflation is going up, that's good for gold. If inflation is going down, it's good for gold. If Elon makes it to the moon, that's good for gold. Derek, how much do you care about why, or do you just see the chart and it's it's going up or whatever?
Gold is the new Bitcoin. Crushing it. Been crushing Bitcoin recently. I mean, look, gold is worth as much as, for the most part, there are some use cases beyond this, but it's worth as much as the next person willing to pay for it. So your technical analysis, your study of supply and demand is just that's where it's at with this. So I kind of agree on the why not mattering as much on the gold trade, but the move has been incredible. And JR just went over the technicals perfectly. And if that breakout was there, that rolling bottom for continuation over the course of like November, December, January was there to the next breakout that we're now having here in February. The gold chart continues to look fantastic. I don't think it's so extended that it can't stop either. I don't really trade gold too much. I'll trade the gold miners once in a while. I don't have a position in them right now, but it looks like this GDX has been underperforming GLD a bit. So yeah, I think JR summed it up pretty perfectly already.
Okay, let's go to another fun topic since Elon came up. Tesla. Been kind of a mess this year. It's having a good day today. So JR, he did some right before we came on. He started screaming into the mic. So he was buying more Tesla. So JR, what's going on with Tesla?
Tesla had a benchmark came in and did an initiation on Tesla with a $475 price target. And it was approaching oversold territory and taking out a very important anchored VWAP at 345. And it seemed to me like it was time for a technical bounce. And that's all we're seeing here. We started buying Tesla at 333, bought some intraday to the 337 handle, sold some, trailed out, and then bought it again. And I've been in it all morning since the 335 to 78 handle, and I'm looking for 344, maybe 350. 350 is a key gamma level too, so potentially we got to move back to 350 here before it rolls right over again.
Okay, 350 before it rolls over again. So unfortunately, we don't have a dramatic Tesla price target, but we do have a special guest. Sami Abusad is here, but he's not listening to me, even though Sami's my best friend in the world.
Very stoic Sami this morning.
Sami, you with us?
I can't hear you. Sorry. Terrible. I can't hear you.
La 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 la.
You just gotta take like a poster board and put it up and say Tesla, and he'll give you the opinion.
Okay. All right. While we wait for Sami, so Derek, what do you make of Tesla up here?
So I mentioned to the team this morning in my morning meeting that Tesla's due for an oversold bounce. That's exactly what you're getting. I didn't buy it. I'm not going to buy it. I'm so done with the stock. Outside of an oversold bounce in this, which is what you're getting, and it was a good trade today, this thing is an absolute and utter piece of crap. It is the worst looking Mag 7 stock that's out there. It's the only one so far. But a bunch of Mag 7 stocks look really bad right now, in my opinion, and are testing major support levels. But Tesla already days ago crushed through its 375-ish support zone that it had established for itself. I mean, imagine being a shareholder of this company right now. I would just be so furious if I was a genuine shareholder at Elon Musk. He's just doing everything he possibly can to show that he doesn't care about this company, that it's not his focus. And then case in point was that absurd OpenAI bid that he put out a couple of days ago. That is just a waste of everybody's time. And while I genuinely hope that some of his Doge efforts are successful in getting rid of government waste, specifically, if I'm a shareholder of Tesla, I'm like, all right, the owner of my company just has one more giant distraction. So I don't want anything to do with this overvalued piece of crap stock after the CEO has alienated its entire customer base, is completely focused on other things. And the chart outside of a downside extension bounce trade that you're getting today and could easily work its way up to that 350 that JR mentioned, or I actually think even higher than that, into 360 or mid 360s, I think is very possible on a bounce, especially if the market supports that bounce. Outside of that, I want to short every bounce setup I can get my hands on in this thing. And shorting Tesla starting at the end of December and through 2025 overall has been a fantastic trade for me. And I just can't wait to get my hands on the next short setup in this thing. This stock is so done. It's ridiculous.
As a Tesla shareholder, I am outraged at at Derek right now. I'm going to file a complaint with whoever the hell is in charge around here. Elon, you do you. We accept the crazy part of you too. Okay, Sammy, we're always talking about Tesla. So what do you think of Tesla here?
I have to say that when you also factor in the fact that Elon is a super whatever the word is, it's no longer Twitter, but he's on Twitter so much. I don't know how he gets anything done. I truly don't understand how he gets anything done. So I agree with you, Derek. I was not thrilled when he acquired the Twitter, but it works differently with Tesla. Tesla is probably, and Elon is probably the only CEO in the world that can do all of this and get away with it. I don't know. I mean, just look at the performance of the stock over the longer time frame, and you'll see that that's true, that it's done marvelous. But in the short term, it is subject to fluctuations like a penny stock almost. So I agree. Now, in terms of the technical picture, it dropped a lot. I was truly like praying almost for a gap down today, because then it would have been a really nice novice gap down and it would have set the bottom. Is the bottom in right now? Let's take a look at it. I picked up some TSLL. I already have Tesla, the actual stock. I picked up some TSLL this morning. That might be the bottom, or at least a bottom. I was just really hoping for a gap down. That would have been the capitulation. But the market gap down, Tesla didn't. So that was unfortunate in that sense. And I talked about it yesterday in the room that if we get a gap down on Tesla, that should set the bottom. Now that we didn't get the gap down, but it's trading pretty well, reacting pretty well to the market. I think the bottom might still be in on Tesla, and it looks higher to at least probably maybe 370, even 380. I'm looking at the chart of Tesla, and then we'll see. We'll reevaluate once the price reaches the declining 20 on the daily chart. That would be my target for the time being on Tesla.
Okay, so since we're on the topic of the spicy stuff, I want to talk about drugs, specifically MSOS, which is like the worst ETF of all time. Like it, and I haven't even looked at the numbers, but I know it's like the worst ETF again this year after 2 years at the absolute bottom. So since Sammy, you came in least, and I haven't had my fix of Sammy time this week. So, like, do you ever get tempted to bottom fish on something like this?
Drugs, and you want me to be bottom fishing?
Yeah, listen, everything is attractive at a certain price.
I see. No, it's not attractive at all, actually. The MSOS looks pretty bad. It tried to bounce, I think it was last year, and it looked promising, and it completely failed. So we as traders must listen to the message of the market. I can present real quick if you want. I can show the chart.
Sure, that would be lovely.
All right, real quick. Sorry, I joined late today, but my laptop wouldn't start. So I'm using my other laptop. Okay, can you guys see my charts?
Yep.
So this is Tesla, obviously. Likely the bottom, but you see why I was hoping for a gap down, because it was down, 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 down. A gap down here would have set the bottom, just like SATL, up, 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 and then a gap up set the top. Even though the market was gapping down yesterday, and then SATL was gapping up, so that's relative strength. It didn't matter. It still set the top because it was a novice gap. So Tesla was the same thing, down, down, down. If we had gap down today, oh my God. But anyways, I have it. I picked up 3,000 shares of TSLL, so we'll see. Remember that trail on half? I mean, I didn't do half. I trailed a third under that bar's low. That was a good trail. Okay, back to the MSOS. So again, our goal is to always listen to the message of the market. So MSOS here in early 2024, last year, it looked pretty promising. It looked like that pattern that I like on the monthly chart. It started to move up and looking good, but now it's back down, gap down, and it failed on the pattern. So we as traders have to listen to the message of the market and see, tell it like it is. It's bearish. I wouldn't buy it If it was free, I wouldn't buy it.
Okay. All right. So, JR, if I was to say to you, JR, I can give you $5,000 worth of weed or $5,000 worth of MSOS, which would you take?
Oh my God. Talk about a crappy choice. Well, I'm not a ganja aficionado. If you gave me the choice between $5,000 worth of MSOS and $5,000 of russet potatoes, I would probably take the potatoes. Maybe $5,000 worth of cigars, or perhaps $5,000 worth of clown makeup. That would also do just fine. But MSOS is garbage. I'm not interested.
All right. Derek, what do you think of this beauty?
Garbage. It's a terrible business. Legal marijuana is a terrible business. We've known this for years. MSOS, at least, is the US based one. So if they ever were to legalize marijuana, it probably would benefit more than like a Tilray or a CGC, which are actually Canadian companies. Is it possible that this at some point creates a base and squeezes higher? Yeah, it's possible, and we can watch the technicals for that trade. I have certainly been known to buy companies that I don't believe in, or in this case, an ETF that I don't really believe in, if I think that there's a technical opportunity to be able to make money. But legal weed is it's a bad business. I mean, they grew too much of it. They grew more supply than there was demand, and I think that most of the potheads I know would still rather get it from their local dealer and avoid the taxes than actually go to a store in New York City or something like that. So it's just a bad business. The chart looks terrible. Maybe if it bases and breaks out, you could get involved to make a few bucks for yourself.
Okay. This brings us to my favorite part of the show. I have like $3 million in my account I need to put to work in the next 20 minutes. So I need ideas, of course. Who wants to go first? Who wants to step up?
I'll do it.
All right. I knew I could tell.
So here's my list. Am I projecting? Am I presenting?
Yes. Mm-hmm.
All right. So this is my list. This one actually triggered this morning. I had a call in the newsletter. So why am I doing the grab? Actually, we did the grab either back here or back here. I don't remember. And it got to target, which was 550. And then if you look at the monthly chart, it's a lovely pattern. Now, the first trade on it was back here. We played the breakout, and now this is a pullback, basically. So I like the grab, and I grabbed some this morning, and it's not too late. That's why I'm mentioning it, because I don't think it's too late, okay? The entry was at 486 is what the entry was, but it's not too late. Tesla is already bouncing. So it's a little bit late for the bounce. Z-Lab, okay, the China stocks are, speaking of weed, these are the ones that are smoking hot. The China stocks, they're amazing. We have the VNet in the newsletter. I mean, look at this beauty. Amazing. I have the BABA. Boom. It's back to, actually took out the prior high. I didn't even know until this morning that it was up that much. So the China stocks are amazing, but they're too late for the most part. Here is one that's not too late at all, the Z-Lab. Is it because it's a bad one that's not going to go? Maybe. But the technical picture is okay on it, on the Z-Lab. So the daily, the weekly, the monthly even is trying to transition. So here it is. I like it. So Z-Lab from the China stocks. XNet is a China stock. Look at the, Mike. Take a look at the monthly, your favorite pattern. It's my favorite, but now it's yours too.
It's
the
beautiful.
Z-Lab, the XNet, amazing, but it's a little late. That's the problem with the XNet, is that it's a little like too late, maybe. There's a bit of a consolidation, so maybe higher after that. The same pattern set up on the EH today, another China stock and the Bitcoin stock. It popped, and if you looked at the monthly, you would have thought maybe too late. But I didn't take it today. And it had the little consolidation, and then boom, another, how much is it up now? 18%. So the XNet looks very much like the EH. The YMM is a China stock. This shook me out. I'm back in. But look at the monthly on the YMM. I mean, just look at this monthly and tell me this is not higher. Don't, because I'll just turn the camera off. This looks amazing.
I love the name Full Truck Alliance. What is that?
What does that mean? I have no idea. Full truck, not half truck, full truck. And Roku, I still like. It's a pain in to hold it, but I still like it. It reports, I guess, on the 13th. Wow. So it reports tomorrow. So we'll see. Datadog, I love because it had a major breakout on the weekly chart. So here's the weekly breakout, major breakout, and now it's doing the pullback. So even though it's a little bit sloppy, Datadog is higher. And here is my most interesting idea. It's the UPS, believe it or not. So if you look at the UPS, it's down for how many years now? And right into the 200, right into an area where it exploded from. And we had the gap down, which often sets the top. So you see the sell setup that's forming, that's bearish. So it's lower in the short term. But if it fails on the sell setup, then I think it goes higher. The UPS. Two more, ATUS, which I already have, but I'm looking to add to over $5 because of that monthly pattern that's forming. So I love it over 5 on the ATUS. I have a call on it to add to the position, but it hasn't triggered. And then the ABC over today's high would be nice, not because of the daily, but because of that monthly chart. Look at the monthly. It's a beauty. So those are my ideas. I created that list quickly while working on my laptop. So hopefully it's a good list. We'll find out next week.
Yeah, we do have a little controversy in the audience. Mr. Blubberhead is saying UPS looks like the gutter ball of death, which it does. It almost looks worse than MSOS, but I will trust Sammy.
Right. So that's the thing, is that a lot of times that's how they bottom. Like I'm in the ELF. I have 400 shares. It's up over $4,000. And we just got it a couple of days ago on the novice gap. So down a lot, gaps down. And then they end up bottoming. Like AMD might even be bottoming. I hate it. I'm not going to play it because it's too close to the 20. But a lot of times you look at the daily chart, and after the stock, if the stock is down a lot, even a bearish looking gap will end up setting the bottom for months to come. So that's what I'm looking at with the UPS. But as I said, not here, only if it goes up and fails on the sell setup by taking out 116 maybe. Like what's this bar's high? That's 114.77. So over 115, only if it takes out 115. That's the idea.
Okay. All right. Derek, aside from stomping on my dreams, since I'm a sad, pathetic Tesla shareholder, what do you like here or don't like?
Sure. So I think, as everyone knows, I'm always pretty big picture down to small picture. So far this year in 2025, international markets are outperforming U.S. markets. I'm expecting that theme to continue. If you look at like FEZ for Europe, crushing the S&P and the NASDAQ. Obviously, if you look at the China stuff, which Sammy just went over, crushing the S&P and the NASDAQ. Shout out to Sammy and myself. We were pounding the table on these Chinese names every day for several weeks now. And now look where Alibaba is. I liquidated my Alibaba position. I'm out of it. I'm out of my JD position as well. I do still have some YINN, but it's getting close to my $40 target. I am still in TIGR, where it's kind of been underperforming a little bit compared to some of those other ones I just mentioned, but having a nice breakout continuation today. I want to see if this thing can get up to $9.50 or $10. So I'm looking for that continued rotation to occur. I am not a bull on this market right now. I think that if you look at most Mag 7 stocks since their earnings reports, the earnings season did a lot of damage to a bunch of these names. And I could do a quick screen share myself here real quick.
Let's see it.
Boom, there we go. So if you look at Google, starting with Google's chart was looking so incredible above $200. And I was really bullish on this name as it was breaking through that 200. The earnings report, the increase in the CapEx, the slowdown in their search percentage. I think they're losing some search to AI, really negatively impacted the stock, and it's pretty technically broken. And on top of that, now it's actually starting to lose support levels where it's getting a bit extended down, where it might bounce or stabilize a little bit, but this thing does not look good. Microsoft forever has been my favorite company in the S&P. I love this thing. it is teetering on the brink of a massive support zone in this like 405 area. It tested it and held it so far today as the market has bounced as well. But this is another one that was just starting to look a lot better, like it might want to break out of the range that it's been in, and the earnings season destroyed it. Apple improving a little bit on the Alibaba news yesterday, which I think was very significant. But Apple's report wasn't fantastic. I think the stock's a little bit expensive. They gapped it up initially because of the fact that Apple returns massive amounts of money to shareholders, and they keep increasing that. Improved a little bit here, like I just said, with the Alibaba news starting yesterday and the bounce back today. But overall, I would say that this chart is like neutral at best. Not as bad as a Google or as dangerous looking as a Microsoft, but it's a problem. Tesla, we already discussed, it's done. I do think that this thing could bounce back into anywhere from 360 as high as a retest of this like 375 to 380 area that it broke down from. But if I can get a retest of that area, I want to short that area. All these Mag 7 names look terrible. NVIDIA improved a little bit. I think this thing looks okay above 130. It's the only one that hasn't reported yet, so it's going to be a really, really important report. Looks decent above 130, gets back below 130. I think it has a little bit of a problem. So we discussed in the beginning about how this market has this huge underlying bid here, and you've got all the Mag 7 stocks for the most part getting hit down, Meta being an exception. Meta was a decent earnings report, and I would still argue that this actually hasn't given as much upside momentum as I thought it would. It's been an incredible grind of 17 positive days in a row, but none of those have really been momentum upside days in this. But this chart still looks pretty decent. But I think if you lose the Qs, then this thing is set for a deeper pullback as well. But that's in some ways the best looking one. But you have this dispersion effect where QQQE has been outperforming QQQ. And I think that dispersion effect ends and that the correlations increase once we get into the seasonal week period that starts later in February, and I think will extend through March and April. I don't like this market. I would potentially look to short almost any of those Mag 7 names that I mentioned once you get some technical confirmation. I think we still might be a week or two out from that actually occurring. And at the same time, I like the idea of buying dips in Europe, of buying dips in China if it comes back in. Potentially, we might see some rotation into some aspects of value. If you remember in 2022, which was a bear market, I'm not predicting a bear market. We're 2% off all-time highs. But if you remember in that bear market period, XLE was the big outperformer in that year. So I don't hate the idea of looking for some exposure to these names, especially if this XLE can really be holding above the $91 area. It's below that right now. But I just don't like this market. I would be very cautious on new longs unless they're one-offs in names that are going to be a little bit less correlated to the market because they've got news, they're an event, or a lot of relative strength, or honestly some of the charts that Sammy brought up. Like that's the type of stuff that I would look to buy. But I'm just concerned that you might find yourself really fighting the indexes at a certain point relatively soon. And I definitely want to make sure I have some shorts on my books right now.
All right, cool. Thank you, Derek. JR, do you have any magic to share with us?
I think what Derek said.
You're muted. Sorry.
Yeah, I got it. He's on. Sorry.
Yeah, you had me muted, Kamo. So if you look at the chart of the SPX, not a whole lot of red on this chart. Obviously, a powerful uptrend. You can see some things jump out at you. Obvious oscillator divergences within this uptrend. Just really basic stuff. You have a couple of high volume weeks, but overall volume is trending lower. You're gonna need a shakeout like you had in August right here. You're gonna need to shake out SPX 5750. Recycle some of these late money longs. We have a lot of late money longs, just ebullient retail money in the market that's going to need to get shaken out. So if we get another August style shakeout, I think we're going to be ready for the next leg of the market. But right now, the technicals are definitely screaming flash crash potential, two-legged corrective wave type of distribution. So it is a difficult market to trade for sure, especially for a guy like me who likes trading sticks of dynamite, right? I like those long weekly breakouts and then 1, 2, 3 type setups. I like high tight flags. I like high platforms. So those require a strong market. But still, you have to pay attention. There's really strong sectors like, the REITs. I mean, look at this move. These are really, really strong charts in a market that looks like it may be coming in. Well Tower, another one I'm looking for it to come in. Alaska Airlines needs to build a nice right side base, and I think you have a beeline to 100. AXS, another one that needs to build a nice right side base here for a couple more weeks, and I think this is going 150, 160. Lilly, this is a bit more of a stick of dynamite, but look at this breakout here, inside bar breakout, 1 to 3, whatever you want to call this. You got a beautiful curling wedge reversal off of I would call this a power pivot, basically higher pivot low, inside bar breakout coming. I think Lilly's going to take out the prior highs. That looks really good. CrowdStrike, despite all the turbulence in the market, look at the outside bar reversal on the weekly. This one to me looks like it's going to 500. It doesn't give you a lot of pullbacks. NET, which we've been long NET and CrowdStrike. We nailed all of these. Now I'm looking for right side bases to build when I need to see reaccumulation and fast moving averages holding. But they look really good. TEM. We bought this yesterday after the little platform breakout here, and I'm looking for this to go to like $120, $130. Just bought this. It looks great. So there's things to do in the market, but I definitely agree with Derek that we have to be patient. There's a new THG's Hanover Group. You have buy setup for me here on the daily, on the weekly, inside bar. You can potentially break a 167.28. Even Tesla. Look at Tesla on the weekly here. You have a shakeout through the 21 and potentially a buy setup through 363. There is enough retail money in Tesla to make this buy setup work on the weekly, in my opinion.
So JR and Derek, you're bearish on I missed the first part of the show, obviously. You guys are bearish on the market? I've been wrong before, but I'm just wondering.
My target is 6,300 SPX, but I do think we need to have a little bit of a shakeout before we go higher.
But look, today we had a gap down. If the market was truly bearish like you think it is, it would have followed through to the downside. And the market is in an overall uptrend. So we stay with the trend until the trend breaks. So that's what I'm thinking.
Sure. So I've been saying that I'm waiting for technical confirmation on the idea, which has not happened yet, especially with another save today. I think that based on the market dynamic information that I've been reading, I think that this very shallow dip buying market isn't going to last much further. When you look at January through mid-February, there is just a tremendous amount of inflow, that money inflow that goes into the market through that period of time. The January effect really lasts all the way through mid-February. There is a tremendous amount of forced buying that's been coming into this market every day. People are jumping in immediately to buy these like 1.5% to 3% downside dips, and today included. I mean, today's bounce back, I think, has really been incredible. I think as we get into later February, that is gone. And the data that we were talking about earlier today shows that retail has been buying right now in a way that they have never bought before in history. So the market hasn't broken its uptrend, 100% correct, but it hasn't been able to break out either. So first of all, I change my opinions all the time as new evidence presents itself. If we break out to new all-time highs, I will probably very quickly become bullish. But the fact of the matter is, we have just been going sideways on these December highs for 3 months right now. And that same pattern could be a distribution pattern if support levels begin to break. And what is the definition of distribution traditionally? It's the period of time where the smart money sells to the dumb money. Well, that's happening where we're not breaking out to new all-time highs in this consolidation period. Retail's buying in a way that they've never bought before, yet we're not breaking out either. So you show me the breakout through like SPY 610 that gets us to all-time highs and we close up there, I'll very quickly change my thought process and say, all right, technicals are breaking out. We're full on bull mode. Let me get out of the way on some shorts. Let me see what I can buy. Until that happens, I think that the market here is technically neutral or neutral to bullish, but not full out bullish. And I think that the data beyond that shows that maybe this consolidation is actually a distribution period. That'll be confirmed if the support levels and the trend actually breaks. So if that trend breaks, then this will look in hindsight like it was a distribution period, and we could get a 7 to 12% pullback in the market that could happen, I think, very relatively quickly. But this is the way I think about markets in terms of if-then statements. If we break out to new all-time highs, then this shows that this was just another bigger picture bullish consolidation period, and you want to be long and you want to continue to ride that trend for the next leg of it.
Can I clarify with my chart here? I want to share this with Sammy.
Yeah.
Because here, Sammy, can you share my chart?
Yep, I'm pulling it up.
All right. So this is the pattern we've been in. Okay, we've been basically bouncing between a declining line and anchored VWAP. It's been a complete mean reversion type of chart. Now, this bulls are accumulating, bears are selling the top line. It's a tug of war. What I'm saying is, in a market like this, as you approach the apex of this pattern, okay, the market, if it breaks down, is going to want to resolve this unfinished auction here at 58.15. Okay, do a little bit of market repair right here. That doesn't mean I'm bearish on the market. What it means is that if we're unable to break out of the stops line, right, bulls are seeing an inverse head and shoulders, bears are seeing lower lows as we approach the apex of this wedge, because we're wedged in between anchored VWAP and the tops line. As we contract further and further here, we're going to get a big move, and in my opinion, a flash crash type of move back to this unfinished auction here at 59.17 is highly likely. It doesn't mean the market's crashing and going lower. As I said, my SPX target is 63.30, but a shakeout to this level would actually, in my opinion, reinvigorate the market and allow us to actually have a prescient and sustainable move higher.
Sure, anything can happen in the market. But if the market is neutral to bullish, then your bias should be neutral to bullish. That's my point. The market is in an uptrend and consolidating in a very, very choppy way. That doesn't mean we should turn bearish because the market is in an uptrend. So that's my point. But look, I've been wrong before. We'll see. We'll find out.
I don't think you're understanding what I'm saying. I
am understanding what you're saying.
But what I'm saying is I do expect some liquidation before we go higher.
Right. No, I get that. Yeah, that's why I said anything can happen, but I'm not really counting on any hypotheticals. I'm counting on the trend continuing unless it doesn't, but that's what I'm counting mostly on the trend continuing, basically.
And to be fair, I have 20 something longs on right now. So I've got longs on. I also do have shorts on. My view of technical analysis and what it is has evolved over the years. So technical analysis is studies supply and demand. Traditionally, I always viewed that 100% through charts. I no longer view that 100% through charts. I view it through charts plus a combination of the data that I'm able to get that tells me who is forced to buy and who is forced to sell at certain periods, when everybody seems like they're fully in the pool and the positioning risk becomes to the downside. And that is also, by definition, supply and demand. It just comes from a different form. It doesn't come from charts. It comes from data sets that are published by the big banks that are out there. So I like to combine that information in the technical picture that I look at. But at the end of the day, I take my cues from the technicals themselves. So like I said, I think that this market is neutral to bullish. I've got 20 plus longs on for it. I also do have some shorts on at the same time, but I'm very, very ready to pounce on the short side if I see those technical support levels begin to break and that picture begin to change. And when I see the data begin to support that as a higher probability situation, that's what begins to make me more mentally prepared to do that switch. And doing that process for me personally has been very, very successful the last several years since I really started to learn and implement it.
Yeah, I think we all need to remember there's a lot of things can get lost in like semantics with timing and even what happens over the next week.
Or
But I
the
think
next week. Did you
all
mean the next tweet or the next week? It sounded like you meant the next tweet.
It could be the next tweet. It really could be that's the way the world is. But I'm going to say everybody's wrong. We're going straight up. We're bullish on America.
I'm wrong. I'm with you.
You're not bullish. You're not bullish enough, Sammy. That's what I'm telling you.
I see. I'm bullish on America.
We need to be optimistic. If we've made it this far, we can keep going. That's my mother. That's the way the world works. We're gonna win. We're gonna win. Don't listen to these guys. We're gonna win. Okay. All right. Everybody have a wonderful day. Remember, Friday is Valentine's Day. If you have a wife, husband, pet, children, whatever, go get them something nice. All right. Everybody have a day. Everybody have a great day. Thank you, guys.
I'll send you some roses, Mike. Thanks.
Thanks.